Hello, I'm Tom Bengtson. This is BankBeat Magazine's BankBeat video blog, and I'm very pleased this afternoon to have with me Jeff Plagge, who is the Superintendent of Banking for the state of Iowa. He's also the President and CEO of Northwest Financial Corporation, which is in Northwest Iowa, Arnold's Park. We're going to have a little conversation about what he's seeing from the perspective of both the state's chief regulator and a very engaged banker. So, Jeff, just tell me, what do you make of the last couple of weeks? It's just been crazy. What do you make of it from your perspective?
Yeah, so I of course seen it from both ends, and again, I'm winding down from my NFC role and have transferred that president's title to my successor, but I'm seeing it directly from in the last 2 weeks, it's been about PPP. And it's all hands on deck everywhere with PPP and with banks and all we try to do is of course, try to facilitate that, answer questions and so forth. Prior to that, when COVID first hit, it was kind of all hands on deck of how you shift your bank from in-house branch to teleworking. And it's absolutely amazing how well the banking industry did. And I think you'd probably hear that from bankers and regulators across the country, but it's amazing how fast that happened. Everyone found their gaps. Everybody's business continuity plan will be a little better than it used to be as they kind of sort back through that. And as we're all talking about, there's a lot of things that will change permanently. So
yeah, well, let me ask you about PPP. That really has been just completely enraptured the industry the last couple of weeks. It's kind of unprecedented that the federal government would really rely on the banking system to deliver funds directly to an entire population of the country. But that's kind of what's happened here.
right.
What do you make of it? Was that was that a fair thing for the government to ask? How do you think the banking industry did? And do you think the banking industry will be put in this role again in the future?
Yeah, when I first heard about it, I had both my hats on, and I thought, wow, 100% guaranteed. What are they actually trying to accomplish here? And then when you hear about the details, what they actually plan to do as far as the forgiveness aspect of it and so forth, and I thought, wow, that it's really kind of a brilliant plan. And if the objective is to keep people employed and to keep them off unemployment, number one, number two. But the key objective was to keep them employed. So when this recovery started coming around, you actually had a workforce in place. You have another week or two gap why these employers had to re-engage their employees or find new employees. So when I look at that, I think, all right, that was probably a smart play. And I think going through the existing financial institutions, banks being the primary ones in the SBA world, was absolutely the only way it could have happened the way it did. Now, there's a lot of trust factors here because as you look at it, it's like changing a car or changing a tire on a car while it's rolling down the road. I mean, everything was happening all at once. Rules were there, rules weren't there, rules changed. And I get all that. I'm not pointing fingers at SBA or the Treasury. It was, just an amazing amount of activity in a very short time. So, obviously the banking industry and us as regulators are going to count on Treasury and SBA holding up their end of the bargain there and recognizing that, the banking industry was trusting the government on the rules as they were being written. And at the end of the day, expect those guarantees to hold without being challenged. I think the latest thing with the Fed putting together the funding line was equally important. Because if they hadn't, some banks were just going to run out of liquidity to be able to handle anymore. So I think the current story over the weekend is there's a lot of small businesses that didn't get the money. A lot of maybe the larger sector did. But when you look at it, the smaller sector, the sole proprietorships and so forth, weren't even open to get the money or to apply until April 10th. So naturally, you were going to have a different segment. I think the segment going forward on the round 2 and maybe round 3 will reach a lot more of those smaller ones, and you'll see a lot more numbers or a lot of big numbers with smaller average volumes from the public.
Sure. Hey, and let's go back now. We're in this COVID-19 environment. It's changed really how everybody does business, including the Iowa Division of Banking. Now, how would are- all of your exams, my understanding is, have gone to a remote format.
Right.
How is that going? What do you make of that? Do you anticipate that that will become the standard way that exams are done in the future once the COVID thing resolves itself?
Yeah, so it's really been interesting and quite impressive, quite honestly. And I hear this from other state superintendents and commissioners as well, how fast we moved to that process. Now, some of the things that we adjusted is, if you're a banker, you understand the volume of questions that we tend to send out and other regulators send out to prepare for an exam. And so one of the things we did was we did adjust those questions and tried to reduce the volume to help the banks, because in some cases the bank staff availability is down and so forth. And they got obviously a lot of other things going on right now with teleworking and PPP and so forth. And so we kind of separated the list of the have tos that we need from them and those things that we may ask for later if we need them. And we also leave a caveat in there that at some point we may still come into your bank ahead of the next exam to do some follow-up work on specific areas of the exam. But overall, I'd say it's worked well. We had virtually almost all banks except nobody pushed back and said, hey, I want to delay my exam. But as a 41-year banker, if someone offered me an offsite streamlined exam, I'm probably saying yes to that.
Sure, absolutely.
Going forward with it. But to your other question, I think it will change exams. I think, we have learned a lot about what we're capable of. I think banks have learned a lot about how these things can be done. And shame on us if we don't step back from it to say, all right, let's look at future exams. I think there's some value. There's still value to an on-site exam for both sides of the desk, both parties. And so I don't want to necessarily gravitate away from off-site exams. But if we could do 50 to 70% of it off-site and just come on-site for a shorter period of time for specific things, I think there's some value to that. And that's what we need to step back on it. And again, all banks are not created equal. We have large banks, we have small banks, we have highly rated banks, we have some that are fighting some particular troubles, so there's lots of things that can change up what we need to do on site versus what we can do off site.
As you talk to your bankers and you survey the landscape, what do you make of the economy? Of course, the unemployment rate has skyrocketed. People are very concerned about what might happen in the coming months. What are you seeing, and what would you say?
Yeah, so just kind of one caveat, a precedent to that is, think about this had it happened. This health issue, had it happened in 2008 versus the financial crisis that we had. You think about what we have changed in the last 10 years in the banking industry. It is amazing how much self-service that employees can, or that customers can do for themselves now. So, the whole banking industry kind of was getting ready for this unknown. We were looking at it as convenience, but as an unknown to where we're heading on this. But so that has really helped lower the anxieties, made the offsite banking so much easier to work at. To your direct question about about the economy as a whole, it is disturbing. And there's even today, when you look at what's happened to crude oil, my oldest son has 4.5 twin daughters, and said, Dad, Lauren and Anna can buy crude oil with their weekly allowance now. It's just unbelievable. And if you're a lender in that space, what a disturbing trend that is. But even in the packing plant issue that's going on, I don't know what's happening in Minnesota, but in Iowa, the number of cases has surfaced. So the potential to, kind of radically blow up, or at least partially blow up the supply chain is becoming more real in the livestock sector. So those kind of things, already adding kind of injury to a little bit of a struggling ag sector already now. Now, if this goes another 90 days, that gets to be a much bigger challenge, and it gets to be a customer-to-customer discussion and relationship. And if it goes another 90 days, you probably have a whole new level of government discussion in part of that discussion as well. But I'm pretty confident that if we can find an end, whether it's because we found a vaccine, we figured out the testing, the combination of both, that we'll work through this. I think the thing that will be interesting, Tom, on this one versus 2008 is, we think we fixed a lot of things in the banking industry in 2008 with the Dodd-Frank legislation and so forth, and we no doubt did. When you look at the fundamentals of residential mortgage and other things, we no doubt did. But what we're also finding out is we just shoved a lot of it outside the banking industry. And the mortgage servicing discussion going on is a big part of that. I think, consumer lending through fintechs, I think small business lending through companies like Square. I think about some of those companies that are online unsecured lenders. I mean, there was no risk model they ever developed that had 70% of their customers losing 100% of their cash flow. And so, what we don't know is the impact of all of this on the outside as well, plus the unemployment with consumers. The tougher thing for somebody to deal with is somebody that owns a big apartment complex that has half of their tenants not pay the rent in April and May. It's one thing, for a mortgage lender to add 3 payments on to the end of a 30-year mortgage or a 15-year mortgage. You can work all that through. It's another thing to add a rent or 2 months rent payment to a remaining 8-month lease. And so those are the struggles that I think have yet to be determined. Some of this unemployment and the extra unemployment, maybe it works through better, but the early statistics on non-payment is pretty abrupt.
Right, certainly makes you think. Time has been flying by here. We're going to have to bring this to a close. I just want to really quickly ask you, all the bankers that you're talking to, the banks that you're seeing, are you seeing any asset quality problems yet, or not so much?
No, it's been remarkably steady. When we measure classified assets to capital is really one of our big measurements. Classified assets to assets, and those have tended up a little bit as an average, but not much. And now some of the outside outliers have gotten a little bit more though. But our troubled bank numbers, when we say troubled bank, 3-rated banks, have not changed virtually at all in the last. We maybe added 1. I think obviously the next 6 to 12 months is going to be the story on there. And I expect classified assets are going to go up. One of the things that I'm really promoting, Tom, just as to kind of a finish up here, is nationally and with others, a lot of this program that's going on now is short-term fixes. What we need is long-term fixes. And at the end of this crisis, no matter how long it lasts, there are going to be millions of small businesses that need totally restructured in this country financially to have a shot at recovery and cash flow. And one of the things that needs to happen is the SBA needs to lift the restriction against giving banks guarantees against existing debt structure, to allow them to take these small business loans, totally restructure them, extend them out, and then be able to get a 75 or 80% guarantee on it in order to do that. And I think if we can get those kind of longer term programs built into phase 4, I think it helps the banking industry control their credit quality and to give the customers the best chance possible to recover from this. So whether it's that or others, those are the things that I think we need to start thinking about now on the longer term side. We did it in the ag crisis years with Farm Credit. Our farm service organization, which used to be FMHA, it worked great, saved a lot of farmers, saved a lot of banks, quite honestly. And I think it's going to take that kind of effort for this one as well.
Thank you very much. Jeff Plagge, Iowa Superintendent of Banking. My name is Tom Bengtson. I'm publisher of BankBeat. You're at bankbeat.biz. I hope you'll check back often. Thank you.
Thank you, Tom. Appreciate it.